Not doing your bookkeeping is one of the single greatest mistakes that you can make as a business owner. For one, you cannot file your business taxes without your books being done in most cases. Secondly, not having your books completed can actually cause you to overpay in taxes because no one will be able to identify your deductions, including yourself, and even the IRS says this. And third, and most important of all, it can cause your business to fail. Poor cash flow and financial mismanagement is one of the top reasons why businesses fail. As Warren Buffett once said, accounting is the language of business. Good accounting is not about boring and tedious record keeping and taxes. It's really meant to help you make informed decisions to grow your business. But you can't do that without having financial information on how your business is actually doing. So today I am going to help you get your books back on track by giving you a very simple and easy beginner's guide as a licensed CPA that helps people manage their accounting and taxes every day at mycpacoach.com. And all you have to do is sit back, save this video, and watch until the very end for everything you need to know. So let's go ahead and jump right into it. Okay, so the very first step we need to take is number one, creating a bookkeeping system for our business. Believe it or not, over half of all small business owners do not have a bookkeeping system, which is exactly why so many of them mismanage their finances and overpay on taxes every single year. Now, the IRS states that you may choose any record-keeping system that clearly shows your income and expenses. So there is no requirement for you to use any specific program to manage your books. You can manage it through paper receipts and journals, Excel spreadsheets, or more sophisticated accounting programs. But that is your choice. The IRS does not dictate that, so just pick whatever works best for you. They just require that you have a system that clearly shows your business gross receipts or sales, purchases you make, expenses you incur, and other assets you own, as well as a summary of all the transactions that make up those numbers. Also, if the IRS questions your records, it is very important to understand that you have the burden of proof. If you are unable to prove that your records or expenses that you claim are legitimate, the IRS may disallow your deductions, or worse, you may end up being fined. So beyond just keeping up with transactions in your bank statements, you should also keep up with supporting documentation related to those transactions, which I will cover shortly here. But right now, if you are starting from scratch, you need to set up a bookkeeping system that makes it easy for you to do all of this, like tracking your income and expenses, keeping up with your supporting documentation, and generating reports that you need in a matter of seconds. Now, at our CPA firm, most of our clients just use QuickBooks Online, which does all of this and is relatively inexpensive. They are by far the market leader for bookkeeping software, so if you don't want to overcomplicate things too much, then I would suggest just using them, and I'll include some discount links from our firm for you in the video description below. Anyway, once you have identified a good bookkeeping system, you can move on to step number two, which is centralizing your transactions. With this step, we want to pull all of your business transactions into your new bookkeeping system, which is extremely important because one missed transaction can throw off your entire bookkeeping system and all the reports that come out of it. For example, one missed transaction could be a missed tax deduction that could have saved you more money in taxes. Or on the other hand, one missed sales deposit could trigger an IRS audit and cause more problems because the IRS sees that you're underreporting your income. And as a CPA, I often see business owners make a lot of mistakes here. Some of them have so many accounts that they accidentally miss one of those accounts and fail to account for those transactions altogether. Or even worse, sometimes I will see people operating their business out of their personal bank account, which is a bookkeeping, tax, and legal nightmare. Commingled funds will make doing your bookkeeping 10 times harder because now, with every transaction, we have to question if it is legitimately related to your business or not. And it's not just hard on your bookkeeper, it's hard for the IRS as well. If they see that you are commingling your funds, they may disallow certain tax deductions that are in fact legitimate, but unfortunately, they have no way of telling whether it is or is not. And from a legal perspective, you also risk losing your liability protection if you're using something like an LLC, for example, because in order for those protections to work, your business assets must be separate from your personal assets. So please do yourself a favor and operate from a business bank account and try to use as few accounts as possible to keep your bookkeeping as simple as possible. Now, from there, all you have to do is track all of the business bank accounts and credit cards that you have and pull all of those transactions together in one place, which is the starting point for your bookkeeping process to start working. Now, if you're using a system like QuickBooks, then this step is as simple as connecting your bank account to your bookkeeping account, which will automatically sync all of your transactions from those accounts into your bookkeeping system. Or if you're using a spreadsheet, for example, then you will need to export all of the transactions from all of your different accounts into one spreadsheet, which will position yourself or your bookkeeper to begin categorizing those transactions. And once that is done, you can move on to step number 3, categorizing your transactions. At its core, bookkeeping is simply categorizing your transactions into one of 5 different categories. 1, sales, which include all payments you receive in exchange for goods or services. Then we have expenses, which include all costs that you incur to deliver those goods and services. And then there are assets, which may include all cash, inventory, equipment, real estate, or other items that your business owns that will provide some type of value to the business in the future. There's also liabilities, which include all future payment obligations you have, like paying a loan, a credit card, or your payroll. And then there's my favorite, equity, which increases as the business earns more income or receives more capital from shareholders, and it decreases when capital is dispersed to those shareholders or when the business income declines. Now, on the highest level, every single transaction in your bookkeeping system needs to be classified into one of these 5 categories. And it is common to add different subcategories within these areas. For example, I generally try to categorize my expenses into the exact categories that coincide with the deductions that I will take on my tax returns. So I might have a category for salaries and wages, interest expenses, or advertising expenses, for example. Properly classifying your transactions is arguably the most important component of bookkeeping, but it is time consuming to be fair. Fortunately, you can automate a bulk of this work with the right system. For example, many tools like QuickBooks and Xero have rule-based features that will allow you to tell the system how you want to categorize certain types of transactions, and once configured, it will literally categorize those transactions for you while you sleep. So when setting up your accounting system, you will want to look for features like this that can help you save more time and free you up to work on growing your business. Step number 4, maintaining supporting documentation. So categorizing transactions is one thing, but you also have the burden of proof when it comes to proving that those transactions are in fact related to your business. And because of this, it is absolutely critical that you maintain proper documentation to substantiate your bookkeeping records. And it varies based on the type of transaction that you have. But generally speaking, you will want to keep up with all of the invoices, receipts, bank deposit slips, purchase documents, and virtually any document that coincides with the transactions you record in your bookkeeping system. Additionally, for certain types of transactions like travel, transportation, and meals, you should keep additional documentation as the IRS heavily scrutinizes these types of deductions. For those instances, it is recommended to maintain a journal, a log, an agenda, or meeting minutes that document what business activities are actually being conducted in connection with those transactions in your bookkeeping records. Now, most modern bookkeeping systems like QuickBooks already have a record keeping function that will actually allow you to upload receipts, invoices, and other documentation directly to your transactions as support, which is highly recommended. But even without that, it is recommended that you keep up with either paper or electronic documents to support your transactions. Step number 5, reconciling your books. So once everything is categorized and complete, how exactly do we know if we actually did everything correctly? Even the most prudent person can make errors or mistakes, and that is why reconciliations are so important and should always be conducted before finalizing your bookkeeping records or filing your taxes. Reconciliations is simply the process of matching all of your bank statement transactions to what is in your bookkeeping software and vice versa. This process will identify any missing transactions you may have and may even allow you to detect other issues like transactions that were recorded incorrectly or recorded twice. Good accounting systems make this process very easy because they usually sync with your bank account and detect reconciling issues automatically. Because of that, I strongly recommend using a strong system as opposed to trying to double check your work manually, because it can be like trying to find a needle in a haystack. But once this step is done, you can finally move on to step number 6, which is finalizing your financial statements. Once everything is reconciled and categorized properly, you can start generating reliable financial reports that provide helpful information to not only help you file your taxes, but also to make important decisions regarding your business. And there are 2 key financial statements that we almost always recommend you to keep up with. Number 1, your income statement, which is also known as a profit and loss statement. This statement clearly shows your total revenues, expenses, and corresponding profit for the time period. This statement is extremely helpful when filing your taxes because it summarizes all of your income and tax deductible expenses in an easily accessible way. Plus, this statement can also be analyzed in hundreds of ways to help you gain more insights from your business, like knowing your profit margins, gross margins, cost of goods sold, and so much more. And then there's number 2, your balance sheet, which shows all of your business assets, liabilities, and equity value of your business. Once you earn a certain amount of income, a balance sheet is actually required in order to file your taxes. But outside of that, it's often used as a measure to evaluate the overall health of a business. A strong balance sheet might show that the business has significant capital and assets to cover its operations and fund future growth plans, for example, while a weak balance sheet might show the opposite. And these are just 2 simple reports that every business should have and know at a minimum. But CPAs, CFOs, and financial advisors typically go above and beyond this to help you grow your business. But millions of business owners are not doing these simple steps that we just went over, and if that's you, I would suggest starting here. Or if you just want a good firm to handle all of this for you, just apply to work with my team today at mycpacoach.com.